Have you ever wondered why the stock market sometimes suddenly stops trading? It's because of something called a circuit breaker. Think of it like a safety switch for the stock market. When panic selling causes prices to fall too fast, trading is temporarily paused to prevent chaos. In the US, circuit breakers are tied to the S&P 500. If the market drops 7% in a single day, trading stops for 15 minutes. A 13% drop triggers another 15-minute halt. And if the market falls 20%, trading is shut down for the rest of the day. The goal isn't to stop losses. It's to give investors time to absorb information, reassess their positions, and avoid emotional decisions. One of the most famous examples happened during the COVID-19 market crash in 2020, when circuit breakers were triggered multiple times within days. But remember, a circuit breaker doesn't mean the market has bottomed, and it doesn't guarantee a recovery. It's simply a pause button designed to keep markets orderly during extreme volatility. So the next time you hear the market has been halted, don't panic. Take a breath, understand what's happening, and make decisions based on facts, not fear.